Hi, I'm Michael Newrock, and welcome to the Elite Trader training video, which is all about trading trends, market reversals, and significant levels in a synergistic manner for optimal outcomes. But before we get started, I'm just going to go over what we're covering today. First up, a bit of an introduction. Now, I want to thank everyone that's been leaving comments below the video, that's been emailing us, and that's also been contacting our live chat operators. It's been nothing but positive, and I want to thank you all for that. It means a lot. So I'm really happy, most of all, that you've been getting something out of these training sessions. Now we're going to cover a review of Trendcatcher. If you haven't seen Trendcatcher, make sure that you do. And also, as watching the video, make sure you download the special report that goes over it in a little bit more detail. Next up, a review of price flip, and then a review of macro levels. Now, the FX files, that was the fourth video in the series. It was all about tips and truisms of trading in the Forex market, or any market for that matter. If you haven't seen that one yet, then make sure you do, particularly if you're a beginner. It's got a lot of useful tips, for you to navigate your way through the markets. We'll then go over putting it all together, what we've covered so far. We're going to look at some trading examples and some live market analysis. So profiteering from the Forex markets is what it's all about. To profit is great, but to profiteer is even better. To make an exorbitant amount of profit, that's what it's all about. Okay, when you see an opportunity to be able to risk a tiny amount, but to be able to be rewarded with an extraordinary amount. So we're going to cover identifying potential trade opportunities today, as well as determining which strategy is best suited, whether you should use trend catcher, price flip, or macro levels. And we'll be covering taking advantage of missed opportunities. So when you see a trade, but it's a little bit late to take that trade, the great thing about having multiple strategies that all work in unison with each other is that you can take advantage of those missed opportunities. Then we'll cover exploiting positions with additional trades. So when you are in profit and you see new setups with one of the complementary strategies, you're able to take advantage of those. Or when you've been taken out for profit, you can wait for another setup, but not necessarily with the same strategy. It's all about using what strategy is best for that particular time. And then finally, I just want to mention that by popular demand, although we don't promote it, we will be offering weekly market analysis webinars, and they will be starting very soon. All are welcome. So I look forward to seeing you attend those. So let's go over Trendcatcher. This covers the Trendcatcher moving averages. Trendcatcher is about combining moving averages and MACD, which we'll take a look at in a second. It's a very, very simple system, but particularly on the 4 hour, which is my favorite time frame, and even the 1 hour, it works extremely well. So it's all about seeing when a crossover has occurred and taking advantage of that. So the fast moving average crosses over the slow moving average, and while that fast moving average is above the slow moving average, it I it really lets us know that the price is being supported. And conversely, when the fast moving average has crossed over the slow moving average to the downside, it gives us the indication that price is under pressure. So the trend catcher MACD indicator, it's very simple to use, extremely popular. It's been around for decades, but in combination with the moving averages, it works extremely well. So here we have the zero line, the invisible horizontal line that separates the histogram on the top from the histogram on the bottom. And the histogram above the zero line indicates price is supported. So when used in combination with a buy moving average crossover, it works extremely well. And so too, the histogram below the zero line indicates the price is under pressure. So just going over the rules really quickly, for a buy on a trend catcher, we're looking for a moving average crossover. We then want to enter the trade at the close of the candle as long as the price is equal to or above the moving average, which provides us an indication that there's momentum behind that move. You can get into it at the open of the candle, but it is a little bit more risky, although in some cases it will allow you to extract more pips out of the market. Place your stop just below the moving average. Give it a little bit of room to move. Don't put it too close up. And it really depends on the lot size that you're using, but I always share and am an advocate for using smaller lot sizes than you would like to use, and give the trade a little bit more room than than having it really tight, because you never know. You want to be on the lookout for spikes against your position. So profit targets can be taken 1 to 1, 1 to 2. You can trail these trades, and because they are um, catching a trade at the inception of the trend, it is extremely good to be able to trail that trade, because taking your hard targets at 1 to 1 or even 1 to 2 could put you in a position where you're leaving a lot of pips on the table. Now, sell rules, it's the total opposite. Fast moving average crosses the slow moving average. Price needs to be equal to or below the moving average crossover. Stop just above the slow moving average. And again, you can set your hard targets or trail the trade down as the trade goes. Oh, I actually just want to mention that the MACD must be below the zero line on the moving average crossover. And just going back to that previous slide, the MACD must be above the zero line at that crossover point. Okay, so price flip. Price flip is a candlestick pattern. It's very, very simple. And the following displays the basic pattern for a valid price flip to occur for a long or buy or for a short. So what we're looking for is at least 2 consecutive candles to the downside with the wick of the most recent candle that closed bigger than the previous candle. And with a sell, we want to see at least 2 consecutive candles that are moving upward, okay, where this close is higher than this close. And we want to see a wick of the current candle being bigger than the wick of the preceding candle. And once again, price flip, I go into it a lot more detail than I am now in the video. And of course, we do have the special report that you can download all for free. So price flip rules, it doesn't matter if there's 3, 5, 10 consecutive moves to the downside, but at least 2. So here we have at least 2 consecutive moves to the downside. This one had a nice wick, but the preceding candle wasn't a downward candle. So here we have a sequence where we've got 2 candles in sequence to the downside, with the close being lower than the previous close. And the wick of this candle is bigger than the wick of this candle. So we want to place our entry on the open of the next candle, place our stop just below the low of the signal candle, the candle that gave us the signal. And then again, we can, just like trend catcher, we can set hard targets, or we can trail the trade as as it goes through. Now, price flip is a great system, particularly for scalping the market, although on the 1 hour time frame, which is my preference for it, I will use the 4 hour as well. You can get some really big moves on this system, and we're going to take a look in a moment of how these two systems, trend catcher and price flip, can work really well together. So for a sell, it's the same thing. In this case, we've got 3 consecutive candles. We do see a wick here, so we see a small cluster, 2 price flips in a row. But on this particular, both of them were winners, but let's take it on the basis of this one. We see the wick here bigger than the wick of the preceding candle, and of course the wick of this candle is bigger than the preceding candle, which had no or a very, very tiny wick that can't even be seen here. Entry on the open of the following candle that provides the signal. At stop loss just above the high of the signal candle. And then once again, we've got targets here. 1 to 2 is what I personally like to look for on any trade. But it's up to you. You can set it at 1 to 1, or you can trail the trade. Whatever you do, particularly if you're going for those bigger targets, I always share that and suggest that you lock in profits as you go. And then the next strategy, macro levels. This is all about key significant levels or super levels or invisible force fields, if you like. These are the levels that the big players, the institutions, typically take positions on, whether they're buying or selling. Okay, it's not a candlestick pattern. It's not about using indicators to identify a trend. It's all about buy zones and sell zones. So the whole idea is to be able to sell a pair when price has broken and closed below a key level, and buy on when price is closed above a key level. Okay, so let's just go over it. Over here it's closed below, so we've got a sell here, closed below. We've got buys here, we've got a sell here, we've got a sell here. Didn't quite work that one. These ones did. Sell here, sell here. Of course, it went down. Lots of sells over here. A buy here. Of course, we can see that bounce. A buy here and a buy here. So the whole premise of this is to be able to buy when price is above support and sell when price is below resistance. It's a very simple concept, and it doesn't look sophisticated. It's not as sexy as a whole lot of systems out there that have all of these whiz bang, indicators on the chart, but it is extremely powerful. And when you combine it with virtually any strategy, whether it's trend catcher, price slip, or any other strategy, it works extremely well because we're not talking about recent highs and recent lows. We're talking about um, macro levels in the truest sense, in as far as these highs, lows, and consolidation zones were created on primarily the weekly and the monthly charts. So we're using the historical data from months or years to be able to help us predict what those key levels are. So let's have a closer look at buy rules. We can see here no particular pattern whatsoever, but when it gets in close proximity, when price gets in close proximity of a macro level and closes above, we see an opportunity for a buy. Okay, place the stop just below, say around 30 pips. I personally use the 4-hour primarily on the system. I will use the 1-hour on occasion, but it works extremely well on the 4-hour, just a bit more stable. Target 1, I'll place here midway between entry and the next macro level. Target 2, just prior to the next macro level, and target 3, just prior to the level after the next. So as you can see here, this system is designed not to scalp the market, but to take positions and hold on to that trade for quite a distance. And your typical macro level trade is going to generate a couple of hundred pips, give or take. Okay, unlike say a price slip, which you may get a good trade out of it pips wise, but on the other hand, it may go 30, 50 pips and then reverse. Okay, so a sell, again, no particular candlestick pattern. This is all pure price action. There are no lagging indicators here. We can see price has closed in close proximity to a macro level. Here, it's a resistance, it's acting as resistance. So we can see the first signal here. We can see, almost the high almost touched the macro level, and here it touched again. Stop loss just above the resistance macro level, and take profits halfway to the next macro level. Second profit target just prior to that next macro level, and target 3 just prior to the next macro level after the next. Okay, so that concludes end of part 1 of the Elite Trader training. Stick with me. Coming up next is some live examples. We're going to go pip hunting and see what we can find, what's available in the market, and most importantly, how we can combine these strategies together for optimal results. Okay, here we are on the charts. Now, you probably noticed straight away that these look a little bit different than the previous strategy charts, and that's because, of course, they are all on at the same time. The big arrows here are the trend catcher arrows. The small arrows here are the price slip, and of course the horizontal levels are the macro levels. So let's have a look. We're on the gold chart here. There was a trend catcher trade here on crossover. You could have gone in at this point here, made a nice profit, maybe taken that profit, and then got back in on these price flip trades. Now, I always suggest that the price flip, you should be using that in combination with the macro levels indicator and or the trend catcher. So in this case, we're looking for other sells. We're going to ignore the buys because, of course, we're in a big 4-hour trend. So we can buy up here, make some pips, and then, sorry, we can enter into the order, sell in this case, make some pips, and then sell again at any of these price flip points. Now, particularly here and here, you'll notice that the price slips came in and closed under or below the macro level. Now, that's exactly what we want. Okay, so and then here again, it gave us another nice strong price flip to the downside. So you can see we can get in, make some pips, get in, make some more pips, and get in, make some more pips. Okay, now the tide has potentially turned. Time will tell whether that sticks or not, but that's basically the premise. So let's just go through. I'm not going to cherry pick these trades. We're currently on broker time of June 1, 0400 hours. So I'll just disable the chart here, and we can see here, here's a nice one here. We've got the trend catcher trade, but what's nice about this one, of course, is because it is that it closed above the macro level, so it's working in unison. Okay, sometimes you'll get a trend catcher trade. Let's say it entered here, and the price might go to this macro level and then bang, just stop in its tracks. And you can see actually these price flips gave us a bit of a warning here, and price did come back to this macro level. So either way you play it, you could have taken this trend catch trade and rode it all the way to the top, or taken some profits and then came back here and entered the market again as a macro level trade. Now this particular movement doesn't have other price slips to the upside, but you'll see that on some of these other ones. Here's one again. We see the price above the macro level, came down, so probably not the best example, but then we can see it again here. Fast moving average is above the slow moving average. We get price flips to the upside, and we were able to catch those trades again. And then, of course, the macro level is giving us more of an idea, a clue that we should be looking for buys because we're currently in a 4-hour trend, which is powerful. So I'll just change the time frame here to the 1 hour, and let's see, we can see a similar thing over here. We can see a trend trade, probably not the best of trend trades in this particular case because the price closed below the moving average and below the macro level. Yet it was able to carry through. If we missed out on that or we got stopped out, then there was another opportunity, this cluster of price flips particularly here, we get two nice ones that saw price move up a little bit, get a bit of a retracement here, but then we can enter the market here again. Okay, so here we can see, just over here, we can see a price flip to the downside. We can see it move down again, another price flip, and then a trend catcher price flip here and then here again. So let's move back a little bit. Okay, here's a better one that I would like. We've got a trend catcher trade that's below the moving average. We see multiple price flips here and macro levels all working in unison. Okay, so let's just go through these charts and see what we can see. Here on the euro, this one over here seems nice. We've got a trend catcher trade to the downside. Okay, it bounced off macro levels. We see a price flip, then another couple of price flips, and then another trend catcher trade, another one over here, and then we see trend catcher trades to the downside all the way through. To the upside, here's a nice one. We get a trend catcher trade move that's just above the moving average. So I would like this particular trade setup. And then we see another price flip here. We see actually a macro level. So if you came in and you missed this trend catcher trade, it moved up, it retraced, bounced right off the macro level. You were able to ride it up. Or if you didn't get either of those two, then you could catch this price flip to the upside because, of course, it's within the 4-hour time frame. Okay, so let's have a quick look on the 1 hour on the euro. Over here we see a price flip given and a trend catcher trade. So that's a pretty strong indication of of what we're looking for. Oh, let's just disable the chart move. Here again we see trend catcher working in combination with price flip. And then again on this macro level. So again, if you missed this trend catcher trade, for example, you could wait for it to come below, price to come below the macro level and take that trade. And of course, another price flip to the downside was able to ride that down. Okay, let's look at the pound. Pound here, we have a nice price flip forming here. Took us to the macro level, it consolidated a bit. We then get a nice move, a small price flip, not the best of ones over there. Well, radical move over there. What can I say about that one? Price flip move over here. Let's look at a upside one. Okay, this one's not too bad. Again, the price isn't above the moving average, so I probably wouldn't take that trade, even though it went really well. But possibly here, it's a little bit past the moving average. Again, if you missed that one, there's another trend catcher forming, and then this would be a nice price flip here, sitting right above the macro level, and then here again. And again, on this case, I'm looking at buys only because we're in the middle of a 4-hour move. Here's a nice one, trend catcher trade to the downside, price slip to the downside, and then you get a macro level to the downside. Okay, so let me just modify that to 1 hour. Now, again, I'm not cherry picking trades on this. I'm just showing you as I see them. Trend catcher to the downside here. We get a price flip just sitting just on the macro level, a little bit above, but we get a nice macro level trade here, and then price slips down here. These ones failed. We then get a nice move here, both trend catcher and price flip at the same time. Indicating a good downward move. Here on the euro pound, we've got a downside move. We've got a macro levels putting price under pressure, and then we get a price flip. So if you missed the trend catcher move, or you were a little cautious, you didn't want to get in at that time, and then perhaps you missed the macro level move, there's a nice price flip to take, which moves all the way down to the next price, to the next macro level. Changing it on the 1 hour here. Let's have a look. If we scroll back a little bit. I'm particularly looking for examples where we can combine them all. Okay, so trend catcher here, above the macro level. I really like that. No price slips on that, but you've got the combination of the two here. Here you've got, oh, here's a nice one. You've got a trend catcher um, that's closed just below the macro level. So for me, that is a really nice trade. We do get a retracement here. So if it took you out here, we've got another trend catcher moving here. If you miss that, then we see another price slip bouncing off, well, breaking through a little bit through that slow moving average. But then the important thing is that it closed below the slow moving average. So it was rejected from that moving average and takes us down. Okay, Aussie on the 4 hour here, if we scroll back a little bit, see historically some moves we've got. Let's have a look. Say in the upside, here's a nice example. We've got an upside trend catcher trade. It's sitting above the macro level, giving us that additional support behind that trade that we take. Because, you know, at the end of the day, not every signal on any strategy, whether it's any of these strategies or any strategy that you find, and no matter how much you pay for it, let me tell you, not every signal is going to work. So you need to be discerning. And that's why I'm pushing the point, and hopefully successfully, that you want to combine your strategies with levels. And then when you miss out on those particular trades, there's other opportunities to get into it. So here we see an upside trend catcher trade above the macro level. If we missed that, or we didn't want to take it possibly because it moved quite far, and then we get a price slip to the opposite side, we then get a nice little price slip here, which took us right through to the next macro level, came back down, gave us another price slip that in the end rode all the way up. And if you missed that, of course, you would wait for the moment when the price came in close proximity to the next macro level, which the way that I see it would be this one here, and then you'd be able to write it up. Again, I'm looking at the upside buys in this case because we're in the middle of a 4 hour trend move. Okay, if it's a downside, then it's the opposite. I'm ignoring the upsides. Okay, the buys. I'm looking at sells. So I can sell here, here. I can sell off this macro level, though this one came down a little bit, but this would be a better example of a macro level sell in close proximity. May have survived if you gave yourself 30 pips, but 30 pips is not a lot to risk when you're looking at a reward of 150, 200, 300 pips, which in this case, I guess we're looking at this opportunity on a price flip. So the risk was um, around 55, 60 pips, and the reward, to this point here of this low was just on 360 pips. So, the idea is to take the money, take the pips when you have the opportunity and get in on the trade at other opportunities. So right here we see macro level trades forming in combination with price flips. So, that's always a nice thing. Here we see a moving average crossover trend catcher above the macro level, but it moved quite a bit. So may have missed that one. Here we're seeing a clue that the price may come back down because it's being rejected at that macro level in combination with a price flip. So let's just look back a little bit. I'm looking for multiple signal opportunities here. At the very least, you can take a look at these opposing price flips as an opportunity to tighten your stops. Here we've got a moving average crossover, another price flip here, and here's another one here. So you get a moving average crossover just on the macro level. May not have taken that one because it came in below, or I would have taken it but had a very, very tight stop on it. In this case, the good fortune of the bulls had it rise up, and we see another price slip to the upside here. And again, right on the macro level. So, this is how important they are. Here's a nice sell to the downside, a price flip on the macro level. Okay, let's take a look at the dollar CAD. That's always a popular one. We're on the 4-hour time frame here. Let's just scroll back a little bit. Okay, here's a good example. We've got cells below the macro level, even though it's a little bit, it's not considered a macro level trade, but you've got the strength of the resistance of the macro level, in your sales when you take this trend catcher trade to the downside. And then you've got price flips that assisted along. Well, here's a good example here. You've got a trend catcher trade, you've got a price flip that occurs soon after, and both are, using that macro level as a bit of strength in that trade. Here we see the original or the highest price flip. Dollar Swiss, nice one over here. We've got a trend catcher trade here. We see a macro level, so if you missed that one, you can see how price reacted at this macro level. Now, what happened here is you can see it bouncing along and using this macro level as support. Then it came down, tested it again, rebounded off it. Okay, so you had another opportunity to get in on the trade here, and then you get a further opportunity here. So these using these strategies in combination not only allows you to take advantage of missed opportunities, but also allows you to, uh, well, either one, close your trades and increase your capital of your account, and then take another trade of not of the same strategy, but in line with the same uh, direction that you were looking at originally. Or number two, you could use it to increase your position on that trade. So, you're a nice profit by here, and then you maybe take another trade at this point, although it was around the same level, but particularly here and here, you could add to that position if you're allowed in your jurisdiction to be able to add positions. Otherwise, close the positions out, take the money and or take the pips, and be able to get into the market again. So the last one we'll look at is the dollar yen. Let's take a look at this. Okay, so here's a good example here. We've got a trend catcher trade to the upside. Um, we've got two price flips in a row that help propel it, and we get an additional trend catcher trade uh, to the upside again. Oh, well, here's a nice one. We've got a trend catcher trade again to the upside, and it's sitting right above the macro level. So once again, if you missed that, you could take a macro level trade. If you missed that, you could, take a price flip trade. Okay, so here's yet another one. We've got a downside trend catcher sitting pretty much right on these or this macro level, and then we get another price flip sell. Of course, we get macro level sell here um, within the 4-hour trend trade, and then we get a price flip here. This is a really nice one because it bounces right off the macro level. And you can see it just is rejected from that resistance point, and then bang, falls straight back down. Okay, so again, you can use these counter price flips as first alerts that the price may be reversing against your position. In which case, I would suggest typically to tighten your stops and take the pips, and then look for another opportunity, no matter what strategy it's on. So in this case, I hope you can see in this short look at charts that you can use these strategies synergistically in harmony together, and if you know that there's a move, for example, to the downside like we have over here, to look for other opportunities um, using macro levels and using price flip in combination with trend catcher. Alrighty, so that wraps up today's video. I hope, as always, that you've got something positive out of it. Of course, Once again, if you haven't watched the videos, make sure you do. And of course, download the special reports. And finally, as a premium member, you get all of these great indicators plus the data feed for macro levels, so you don't have to work out the levels yourself for free as a bonus when joining as a premium member. So until next time, good trading, live well, and I'll see you soon.